Homes are still overpriced, unaffordable, as Fed cut sparks mortgage rate melt-up. This wasn't supposed to happen. Treasury yields have taken off rather dramatically since the Fed slashed rates by 50 basis points in mid-September, as the market seems to be screaming policy error rather loud, or political pandering if you squint a little. But it's not just Wall Street that is questioning the Fed's actions. Main Street is hurting even more, as mortgage rates have soared back near recent highs, crushing the optimism that the American dream is back for some. As the Fed telegraphed its rate cut and then unleashed it, mortgage applications suddenly soared, after stagnating at multi-decade lows for months, amid optimism that the housing market was back and affordability might shift back into realm of possibility for many. But since the rate cut, mortgage applications have plunged back near recent lows once again, as mortgage rates soared back from two-year lows above the 7.0% Maginot Line. It is a difficult time for home shoppers as they have been whipsawed by mortgage rates and media enthusiasm for the Fed's actions, but homebuyer confidence remains extremely low, especially compared to homebuilder confidence. As Bloomberg reports, the jump in rates serves as a double whammy for homebuyers, choking off affordability and discouraging more owners from listing properties. The supply of housing has been kept tight by the so-called lock-in effect. Few homeowners are willing to sell if it means taking on a higher mortgage rate. It's going to put a damper on sales, affordability has gone down, and the lock-in effect has increased, said Scott Bukta, head of fixed income strategy for Breen Capital. We think we'll need a sub-5.5% mortgage rate to unthaw the housing market, which probably doesn't happen anytime soon unless we go into a recession. And a recession is not exactly the kind of environment that prompts homebuyers to pile into their largest debt asset. The issue facing homebuyers is not a new one. It's been in place since the COVID lockdowns as home prices soared, even as mortgage rates exploded higher. I'm seeing a ton of homes that are overpriced, and you're seeing multiple price reductions, said David Lamp, an agent with the principal team at Metro Brokers. That didn't stop the enthusiasm, pushing many to buy and spark upside surprises to recent housing macro data. Sadly, we suspect that decoupling from the reality of mortgage rates will be short-lived. The excitement is waning. There was a lot of excitement in July, August, and September as rates were coming down. Mortgage banker Shant Benosian in Waltham, Massachusetts said, "When rates start approaching 7%, it changes people's budgets big time." Well, rates are back above 7% again. And given the recent surge in economic data, another Fed rate cut in the face of this strength will only worsen the situation, sending long-end yields and mortgage rates higher.